Now that we know where the money flows, let's talk about where the money goes. On the books, that is. We know where it goes once it hits my wallet. Like everything, we've got to show a record of payroll on the general ledger. This is really easy to do, especially with only a handful of employees. But if you've grown your business to hundreds of employees, that journal's going to be as unmanageable as a batch of balloons in a top down convertible on the freeway. Am I right? That's why individual employee information is kept on a payroll register. It includes all those specific terms you saw on that pay stub we looked at a while back. Those entries are then totaled and transferred to the general ledger. Now, the nice thing about software managing your payroll is that it does all of those register entries for you. You can then run a report to get those totals. But right now, you'll need to add a journal entry for payroll. I'm going to let one of my colleagues show you how it's done while I check on Xavier. Eddie should be here by now, and we'll have some work to do.
The entries that are created for payroll include typically potentially three entries. The first one, think of as an employee focused entry. That would include debits for expenses like salaries and wages, overtime, and other things that are being paid to the employee that are an expense for the company. And of course, any deductions from an employee's paycheck. That would include things like liabilities for tax withholdings and health insurance and other benefits that are withheld from the employee's paycheck, as well as potentially any other types of withholdings, a loan repayment or a garnishment or whatever the case might be. Then you might think of the second entry being something that's a little bit more employer focused. So as you'll recall, there are taxes that an employer pays on behalf of the employees. That would be part of the Social Security and Medicare that is paid. That is an expense to the company. That's the matching portion. You might also have federal and state unemployment, and there could be other types of taxes and other expenses. Perhaps the company is matching part of the health insurance or other benefits that are being paid out, perhaps even a retirement savings, things like that. So those would be expenses, debiting the expense account, and again, crediting either cash going out or a liability to be paid later. The third entry would be the actual payment of those liabilities. Of course, it now debits that liability, so that clears out the liability, pays out what is owed, and of course would credit cash. Now, depending on the accounting system or the payroll system that is being used, that could all happen as one big entry as well, but those different pieces, the employee focused portion of it, that is the expense to the company, and then whatever is withheld and payable out, as well as the employer's expenses and whatever is payable out. And then finally, the actual payment of that, depending on the timing and how that all occurs in the payroll system, that can be one big entry, but all of those pieces are going to happen. One last thing that I'll make mention of with these journal entries, it's important to note, depending on the client, if it is going to be recorded as of the payday or if it's going to be the pay period end date. Again, something else that might need to be considered as we are talking about those entries.